Welcome back to Explain the Charts, everyone. Today, August 1st, 2025, we're dissecting the recent movements and future prospects of ETHUSD, a crypto asset that's constantly making headlines. Just 8 minutes ago, ETHUSD reported on Ethereum's ambitious 10-year lean plan, targeting an astounding 10,000 transactions per second and quantum resistance, showcasing significant long-term vision. This forward-looking development strategy is a strong fundamental pillar for Ethereum's future growth and adoption. We've also seen a shocking inflation report recently, causing Bitcoin, Ethereum, and XRP to tumble, reminding us that macroeconomic factors heavily influence even the most resilient cryptocurrencies. However, despite this, July has been a stellar month for Ethereum, with its price soaring 56%, marking its strongest monthly gain since July 2022. This surge is largely attributed to robust ETF flows and significant buying from ETH treasury firms, as reported by Cointelegraph and Yahoo Finance. Corporate treasuries and spot ETFs now hold over $32 billion in Ethereum, signaling increasing institutional confidence and mainstream integration. Analysts like Edward from CoinDesk are even forecasting ETH could surge to $15,000 to $16,000 in this cycle, citing bullish technical patterns and continued institutional inflows. Adding to this bullish sentiment, ETHUSD revealed that whales collectively purchased 722,152 ETH worth $2.77 billion in July, indicating strong accumulation from large holders. Looking ahead, the potential approval of an Ethereum exchange-traded fund with staking capabilities by October 2025 is a major catalyst being discussed, as highlighted by EMJ Capital's Eric Jackson. Such an ETF would lock up ETH for staking, further reducing circulating supply and increasing scarcity. Beyond ETFs, Ethereum's post-merge deflationary trends, the rapid growth of Layer 2 scaling solutions, and the increasing tokenization of real-world assets are all strong fundamental drivers supporting a long-term bullish outlook for ETH. These factors contribute to Ethereum's scarcity and utility, making it an attractive investment. Now, let's turn our attention to the daily chart to see how these news events are reflected in the price action. Looking at the one-day chart, we can clearly see the impact of the July rally, which aligns perfectly with the news of strong ETF flows and whale accumulation. Price surged from lows around $2,000 in late February/early March 2025, peaking near $3,880 by late July, a substantial recovery. The $3,000 level acted as a significant psychological and technical resistance point earlier in the year, which ETH successfully broke through. Following this impressive run, we've recently seen a pullback from the late July highs around $3,880 to the current price of $3,694.04, reflecting the impact of that shocking inflation report we mentioned. This pullback could be seen as a healthy correction after a strong upward move, potentially retesting previous resistance levels as new support. Key support levels to watch on the daily chart are around $3,500, which previously acted as strong resistance in May, and then further down at the $3,200 to $3,300 zone, which was a cluster of price action earlier in July. On the upside, the recent high around $3,880 to $3,900 is the immediate resistance, and a decisive break above this could pave the way towards the crucial $4,000 psychological barrier. Volumes have been substantial during periods of strong upward movement and recent pullbacks, indicating active participation from both buyers and sellers. Zooming into the 1-hour chart, we can observe the more granular details of the recent volatility. Let's focus on the period from July 11, 2025 to July 14, 2025, a time that captures the immediate aftermath of some market shifts. Here, you can see how ETH moved from around $2,950, broke through $3,000, and established support there before making higher highs. The short-term trend during this specific period shows a clear upward trajectory, with consistent higher lows and higher highs. This period demonstrates strong short-term bullish momentum, overcoming minor resistance levels around $2,980 and $3,020 as buying pressure continued. Traders would have looked for entries on pullbacks to these newly formed support levels, confirmed by increased buying volume. The candles are relatively large, indicating strong directional moves, which could be attractive for short-term swing trades. The volume on these hourly candles also picked up during the upward push, reinforcing the strength of the move. Now, let's examine the most recent intraday price action on the 15-minute chart, covering the last 24 hours. This time frame allows us to identify very short-term support and resistance levels and potential trading opportunities for scalpers or day traders. Notice the price hovering around the $3,750 to $3,800 range for much of the period, indicating a consolidation phase after recent larger movements. We can see quick fluctuations, with price testing resistance near $3,880 multiple times on July 28 before encountering significant selling pressure. This highlights that sellers are still active at these higher levels, preventing a sustained breakout. The immediate support on this 15-minute chart is around the $3,750 level, where previous dips have found buyers. A break below $3,750 on this time frame would indicate increasing short-term bearish pressure and potentially lead to a retest of lower daily supports. Conversely, a break above $3,820, especially with strong volume, could signal a renewed push towards the recent highs. The thinner volumes on weekends or during off-peak hours, as seen here, can make price action more susceptible to larger swings on smaller capital. To recap our analysis for ETHUSD, let's bring back the daily chart to solidify our key takeaways. Looking short-term, Ethereum is currently hovering around $3,694.04, having pulled back from its recent July highs. Immediate support rests at $3,500, a level that proved significant resistance in May and could now act as a floor. We estimate a 70% likelihood it holds if retested soon. Should that fail, the next critical support is around $3,200 to $3,300, which has a 60% chance of holding if tested, reinforced by volume accumulation zones. For short-term bullish momentum to resume, ETH needs to decisively break above the $3,880 to $3,900 resistance, a 55% likelihood given recent whale activity. In the long term, the outlook remains largely bullish, supported by strong fundamentals like the 10,000 TPS plan, deflationary trends, and the growing tokenization of real-world assets. The potential approval of an Ethereum spot ETF with staking capabilities by October 2025 is a massive catalyst, which, if it happens, makes the analyst target of $10,000 to $16,000 ETH highly probable, perhaps a 75% chance by year-end 2025. However, continued high inflation reports or unexpected regulatory headwinds could introduce significant downside risk, potentially pushing price back towards the $2,500 to $2,700 range with a 40% probability if major supports fail. Always keep an eye on global macroeconomic data, especially inflation reports, as these can trigger market-wide corrections. Also, watch for news on ETF progress and official announcements regarding Layer 2 scaling solutions and RWA integrations. These fundamental developments will underpin any sustained price rally and provide additional reasons for long-term accumulation. For traders, identify clear entry points on pullbacks to support, using confirmation signals like bullish candlestick patterns or increasing by volume on shorter time frames. Conversely, consider scaling out or setting stop losses if price breaks below key support levels with conviction, especially on higher volume. Remember to always manage your risk, do your own research, and stay informed with Explain the Charts for the latest insights.